All right, we're starting early tonight. I already got 105 people on. Welcome to Friday night Forex and Chill. It is July 19th, 2019, and tonight we said we're going to bring you ladies' night. Gentlemen, you're welcome to be on here and get all this knowledge, but we wanted to highlight the skills of two of my top team members in iMarkets Live, Miss Celeste, who's killing the market, trading exotics. That's her forte and her specialty. She's going to share some of that knowledge with you tonight. And Miss Mahogani, she is a structured, disciplined trader with a very good trading plan and a strong mindset. She uses market structure to trade her favorite pairs. So we welcome you here tonight. So this is Miss Celeste on the left in the red jacket and Miss Mahogani on the right. And I'm going to let Mahogani share her screen in just a minute and introduce you to herself and Miss Celeste. So we're going to have Miss Celeste up first and then Miss Mahogani to close us out. And I'm just going to mute myself and be in the background. But I was on last night with my team for 3.5 hours doing some exclusive training. I'm a little tired tonight, and I just really appreciate my team that steps forward and brings you this free knowledge. And we welcome everybody here. If you're a part of another team, we appreciate you. We welcome you. If you're not a part of a team, you're looking for a good home, you found it right here. So I appreciate you. I'm going to stop sharing, and Miss Mahogani, you can share your screen and take over the meeting. I'm going to fade myself into the background, and I appreciate all of you for joining tonight.
Hey team, what is up? I was trying to unmute myself. Sorry for that little silence. As you guys know, as Gwen said, this is ladies' night. And I just want to first just let you guys know that I Am Male is a company that was co-founded and is the chief financial officer of iMarkets Live is actually a woman. The person who taught the other co-founder, the CEO of the company, is a woman. Her name is Isis De La Torre. So it's not just that we are these special ladies of trading. IML began with a woman showing people how to trade. Women trading is exploding. As you see, Gwen, she taught us, she's teaching this team how to trade. So I just want to thank all you ladies for showing up, not allowing for something that's called a male dominant culture to stop you from learning how to invest your money and take your family to the next level. So like I said, Isis, she was the first woman of trading for this team with iMarkets Live. And again, this awesome, awesome, awesome platform has many ladies who trade and teach on IML TV, which is 24/7. So ladies night tonight is just something that we're featuring, but you're going to get a lot of ladies throughout IML teaching you how to trade. I'm going to let Celeste start first with sharing her trading journey. Her sharing how she got here, why she's here, and empower us with, what it is to trade. Celeste, you there?
I'm here. Can you hear me?
I can.
Hey, good evening, everybody. How's everybody doing tonight? I'm watching the chat as I'm talking, and I'm so happy to see that each of you have made it here tonight. And I just want to share a little bit. I consider myself a student. I by no means consider myself an expert. The markets are always teaching. So that's one thing I do want to say. I started my journey with IML maybe a couple of years ago. And so I traded and I plugged myself into the education. And it's amazing. After about a year of being in IML, I actually left IML and traded on my own. And so I was still learning. I was into material. I was still following some of the IML educators on their social media platforms and just learning. I'm a bookie. I love to read books. I love to listen to audiobooks. I love YouTube. I was just digging into the education. But what I do want to say is that IML was the foundation. I would not have learned what I learned without IML. So when I left, I actually traded a little bit on my own. And then I decided to come back because as I started to share my results with people and share how IML had taught me how to trade the markets, I started referring people back to IML for the education, because I truly believe that it's the best educational platform out here. And so I decided, I said, you know, I'm referring people back to IML. I might as well join again and be connected with the community of traders, and also work with those who are joining with me and grow with them. So I've only been back with IML for maybe about a month now. So I'm new to the team, but I'm not new to IML. I'm not new to trading, but yet I still consider myself a student, if that makes sense. As far as introduction, let's see, my name is Celeste. I'm originally from Washington, D.C. I live in Nashville, Tennessee, been here about 25 years. I do work in corporate America. I like my job. That's one thing I want to say. You know, there are a lot of people that talk about wanting to trade full-time and wanting to quit their jobs. Well, I'm one of those ones. I really like what I do. That doesn't mean that one day I won't retire early, but I do like what I do. I'm an accountant, and I love what I do at work. But I also love the flexibility and the extra income that the skill set has taught me to be able to go out and earn extra income for my family. I'm a mother, I'm a wife, I'm a minister. There's a lot I can say about me, but I am a student and I am always learning. I will never say I'm an expert. I will never call myself queen of anything, because I truly believe the mark is just too vast, that the knowledge is too much just to gain for me to consider myself ever an expert. And right now I'm going to Mahogani. Are you there, Mahogani?
I'm here. Thank you. Thank you. Thank you. Oh, goodness. One thing I'm so excited about is the fact that the different types of people that are in this group, women, men, we just have a lot of people who are very good at what they do. And I'm glad to share this platform tonight with Celeste, because she is very, very good at the exotic. And I'm just happy to be here with you, Celeste, and thank you for doing this tonight together. I do want to share my trading journey. My background is banking and also employment placement. So in banking, I actually ran 2 branches. One of the branches was for Waikiki in Hawaii. And our money that we made that actually maintained our branch and made a lot of money for us was foreign currency. People come to Hawaii from all over the world. We're in Waikiki, so we did a lot of currency exchange. Now, I knew that it made the branch a lot of money, a lot of income, but I didn't understand how or why. I just know that we needed to make sure that we catered to our world travelers. Now, when iMarkets Live was introduced to me, it was like ding, ding, ding. You know, now I understood why every night I had to say how many hundreds of thousands of dollars in cash we had in the bank in our particular branch, why there was a cutoff time. They had to have it in the vault how much money we had in our branch, because they needed to take a certain percentage of the money overall in the bank and invest it overnight into Forex. There's actually a law that says they can't invest a certain position above how much ever money they have to invest in Forex. So it was something that I was participating in, taking you guys money in your account and the bank was using it to grow money. I was actually participating in it and didn't even know it. And then still to this day, if you have a bank account or if you have a brokerage, you're still participating in the Forex market. So when I was told this information and it was brought to my attention, I actually said no, because I was trying to run 2 companies. And at the time, I was looking for capital for those 2 companies. And I was like, no, I'm too busy. I need to focus on these companies. You know, I can't do that right now. Yes, I understand the concept. It's the way to make money, but not right now. A month later, it just came to me. I'm sitting here trying to get angel investors to invest using my money, and I'm not going to go ahead and be my own Fortune 500 company. And what really allowed for me to sit and think about it was, I remember Dr. Collender, she made a comment. She said, if you are a grown person and you are under the sound of my voice and you don't have $250 in your account right now to invest in yourself, to make yourself more money, you really need this. And at that time, I had paid bills. I was putting money into the business. And at that time, I had paid my monthly bills and I didn't have it. And I knew that I need to do something about that, as far as other than just my business bringing me money. But let me be the Fortune 500 behind my business. So I joined iMarkets Live, and I was a patient learner. I didn't do what a lot of people do when they first start. I did not go live automatically. I did do demo. I was itching to go live, but I treated this like a business. I treated this like a job. I learned how to do what I needed to do before I just went and jumped. Don't mean I didn't blow accounts, because I blew accounts, but I treated this like a business. So one thing that I did was I just always keep myself very disciplined, and I'll share that with you guys at the end of everything. But I just want you guys to know that everybody has a trading journey. Everybody has a way that they go through this. We are all here as a family to help each other, to support each other, and we're all doing this together. So with that being said, I'm going to give it back over to Celeste. With Celeste, she's going to actually show us how she actually does exotics, moving past the fear of exotics and creating profitability for herself and showing you how she does that. Celeste, you there?
I am here. I am here. So I guess first, just to get an idea, and I can see you in the chat, can I get a 1 if you are already a trader? I'm just trying to get an idea of those who are already trading the markets versus those who are just guests that are interested in the opportunity to learn. Okay, I see a lot of ones. So, okay. Wow, a lot of ones. Don't you see a lot, Mahogani? It's a lot of ones out there. Okay. So we are, so you all already know about trading and the struggle. I'm not going to sit here and say that it's an easy thing to trade. I mean, it's a skill set that you have to learn. And I will say that it does take time, it does take study. And I'm going to tell you, Mahogani, do you have a way that I can share my screen? Or share?
Sure, let me go ahead and do that for you. Go ahead.
Okay. I'm going to share my screen with you. Can you all see my screen? Can I see if you all can? Okay, I'm assuming you all can. Okay. So I just want to share with you something about exotics. And let me go back because I kind of want to see and I want to make sure that you all are understanding where I'm coming from. So I would say with exotics, there's good news. How many of you all, just by show in the chat, have ever heard or generally try to stay away from exotic pairs? Has anybody ever been told do not trade exotics, or have ever felt, you know, I should not trade exotics? And tell me why. You know, I kind of want to hear from you all because I don't want to just be here talking, but I kind of want to understand where you're coming from so that maybe I can understand how I want to present to you. Okay, someone said in the beginning, they said you lose too big too fast. They were told it's too risky, too volatile, it moves too fast. Wide margins, risky. Anything else? Anything else anyone has always heard about? Okay, if we say it's risky, I'm hearing a lot about risky. Need a huge account, Inez. Yes, that's something I'm going to talk about. Easy to blow an account. Yes to risky. Need a large account. So I'm hearing the same themes. I'm hearing that, okay, your broker doesn't offer. I'm hearing that you will blow your account. I'm hearing that it's too risky. I'm hearing that, what else did I hear? You need a huge account, wide margins. But you know what? Is Forex in itself not risky? Come on, y'all, talk back to me. Is Forex in itself, is it not riskier than putting your money into a bank account and putting it in the savings account for you to get 0.01% for a year?
Yes.
Is it not?
Crazy.
If you are here and if you have trade, easy to blow an account. Is it not easy to blow an account on a major or a minor pair? So I just want to submit to you that, quite honestly, the good news is that trading exotics is absolutely no different than trading a major or a minor pair. Now, that doesn't mean that there aren't a couple of things that are different. When I say it's no different, the market structure is the same. When we trade, do we not trade market structure? Yes or no? Are we not taught about utilizing technical analysis, you know, Fibonacci, all these things that we learn?
Yeah.
Yes?
Yep.
Okay, we're told this. So it's nothing else. I'm going to pull up an exotic pair for you. And so first I want to talk about what an exotic pair is. An exotic pair is a currency pair that is not trade. It's not a lot of liquidity in the market for that trade. And so it is true that there are larger margins on it. However, that's why we use risk management. You know, how many of us have ever taken a trade and say we lost a trade, and because we want to win back the money we've lost, we have over leveraged on our account? Can I get an amen, or somebody tell me that you all have not done that before?
I have.
I mean, I can't tell you how many times. It's called revenge trading. You lose a trade and you know, you second guess yourself, and then you say, okay, I'm gonna win my money back. So you go ahead and you drop that standard, maybe. I don't know what you may drop on that account, but you over leverage. And so the thing is, though, with exotics, you can trade it and you can use a micro lot. And I encourage you to even test it in your demo accounts. One of my favorite pairs to trade, and I'm going to pull it up. So it's a myth that you need a large account even. You can have a $500 account, even a $250 account, and trade an exotic on a very small lot size. And I'm going to show you the history of one of my accounts. What I like to do is I like to take baby accounts and I like to grow them. And I like to use those for testimonials to share with people. I have a lot of friends and family who have yet not bought into understanding or trying to understand what Forex can do for them. They are struggling. When I say struggling, people living paycheck to paycheck. They're trying to get part-time jobs. They're coming home from work, leaving their families to go back out and get jobs. There are people who are struggling to make their ends meet. They have children. I mean, it's just a lot and I've been trying to explain. So I use these accounts as a way to testify to other people that it does work. And it does not take a lot, but you have to start somewhere. So what I'm going to do is share one of these exotic pairs that I trade most often, and it's the South African Rand. Has anybody ever heard of USD ZAR? It's South African Rand is one of the pairs that I struggle. This is one of the ones I do very well in. Out of all the trades I trade, I study this one the most. And what I say when it comes to exotics, what is different, they're emerging market currencies. So what you have to pay attention to is, I pay attention to what's going on in those countries. I'm very attuned in. Now, I don't trade the news. You know, we always talk about, you know, you can trade the news, you don't want to trade the news. But I'm very in tune into what is happening in South Africa. You know, the recent election, the corruption that's going on. We have a new president now that's trying to turn the economy around. So we see the Rand strengthening now a little bit. So you have to be kind of in tune as to what's going on in the economy. Another thing that you have to do is, you know, there are going to be a little bit wider margins, and that's because the market for these pairs are not as liquid. So there are not a whole lot of buyers and sellers in the market. So that just means that the same way that we trade our majors and minors, what are some of the timelines or what are some of the worst times to enter the market? Does anybody know that? What about Sunday, as soon as market
First
opens?
opens.
Yes, ma'am. When the market opens is the worst time to trade. What about between sessions, between that Asian session? Well, before the Asian session is about to kick in, there's certain times that you don't want to trade. And you know what? It's because the margins, because it's a liquidity issue. So brokers will, you'll have to pay a larger spread because it's less liquidity in those pairs. It's the same thing with the forex, with the exotics, except that it may be a little bit larger. But I'm telling you, it is not significant. You will not blow your account any more than you will blow your account with a major or a minor. The key is using proper risk management. And so I'm just showing you this pair. If you all can look at the market structure, if this were, and you know what, some of these remind me a lot of I like the GBP pairs, GJ, GBP, JPY is one of my favorite pairs as well. That's not an exotic, but a lot of exotics remind me of how GJ moves when it moves. It reminds me of that, but maybe even a little bit quicker. But if you can get into an exotic pair on a key level or a key zone, and then that's the key that I've learned with exotics. You don't want to enter mid-trend, because if you notice this, look at you see all these wicks where sellers push where buyers push price up, sellers push price down. You can easily get wicked out. But if you enter into a key zone, like for instance, we see this descending channel, which I believe price is either going to go, or it's either going to break up to or to the bottom. But the key is entering in on a key zone, and then you'll put your stop loss, you know, at a proper place. But I use all the same technicals. I use Fibonacci. I use the MACD. I use RSI. I use, I don't use the Ichimoku clouds. I don't use all of that. I use simple price action. I study candlesticks. It's very helpful to know that. And this is all a part of Trading 101 that they teach you in IMO. So this is not new. The only thing is you just want to make sure you're entering in at the right place so that you can maximize on profit. How would you have liked to enter in right here where I'm pointing on February the 19th or January? And this is when the Rand began to depreciate back in January, February. If you would have entered here, had a stop loss, this is on the daily, you could have ridden this pair for 900 pips because along the way, I'm studying the key zones in the market. So it's almost like you just have to know where to enter. There's another pair that I trade kind of a lot. It's the Mexican peso. And it's the same thing with market structure. I'm going to point that out. The market structure is not difficult to understand. And look at this market structure. Is this difficult when you look at it overall? This is the weekly. And I'm going to tell you what happened. Back here in December, November, December, the Mexican government, they had a rate increase. So the peso strengthened. This what you see from here and November all the way down to January. I mean, that is just crazy. That is 1,500 pips. And you know what? I caught all of that on a huge swing. I stayed in there. That's the longest time I've ever stayed in a trade. And I'll never forget this because this is my first real exotic experience in terms of trading exotics was this one. The key was entering in at a key level in the market and riding it all the way down. And we see structure. We see our trend lines. We can use Fibonacci to see exactly. It's really, if you look at it from a daily time frame, it's not any different. You just have to know when to enter. So what I'm going to show now is just my account. Something else I count, a baby account. I have like 5 brokers that I use, and all brokers, I do it for a reason. All brokers don't offer all the exotics. For instance, I like to trade CHF ZAR, which is Swiss franc ZAR. Oanda is the only brokerage that I've seen so far that offers that pair. So I do trade, have different brokerage accounts. But for the purpose of just demonstration, here's a and I'm just going to show you all And what I do, you can see here all of my, this is my LQDFX account. And so you can see all the pairs I've traded, a lot of USD ZAR, a lot of some odd JPY, some gold, but most of it is all foreign currency, all the exotics. I trade a lot of ZAR. I trade a lot of USD TRY, Turkish Lira. Here's some more gold. And this is all the activity for really the last month. And what I do is I open multiple trades. And what you will notice is, look at my lot sizes: 0.01s, 0.02s, buy, sell, 0.01. You don't see anything larger than 0.01s. This account I started with $288.39 a month ago. I ran the support with the criteria. If I can move this out the way, from June the 18th through July the 19th. So you can see, you can even see I've had some losses, y'all. So I trade, I get profit, I have losses. And you can see I've canceled some. You know, I'm human. I sometimes get a fear factor and I'll cancel a trade. But what I want you to see at the very end is that out of all of those, for the whole month, I closed with a profit of $350 on a $288 account. So that is a 54% return on my initial $288 investment. Now I want you to see the swap fees. The swap fees were $47.26. So I do want you to see that you may pay a little bit more in swap fees, but that is not significant. So even if I take the swap fees in consideration, I'm still up 47% for the whole month. And so I want you all to know it's not about always even winning every trade. I'm telling you, I mean, you can look through here and see, I do a lot of dual trading. So what I'll do is if I'm going to trade a 0.10, I'm going to break it up over 5.01s and maybe 2.02. So that's why you see a lot. Like I broke up this USD ZAR, instead of doing 0.04 or 0.05, I broke it up 4 times. But in the end, I want you all to see this. This account was $639.27. I started with $288.39 with a profit of a net profit of $302.92. That's a 47% return. And guess what? When you look down here, of all of my short positions, what percent did I win? 63%. Did I win every trade? No. Of all the long positions I took, I won 53%. But yet I increased my account by 47%. So you know what that tells me and should tell you all? It's not about winning. You are going to lose. I'm just going to say that right now. Don't think you're going to come in here and you're just going to be a beast. And you are going to lose. But what you want to do is you want to win big. And you want to cut your losses. You do not want to stay in a trade and wait for it to turn back around. When you see it's not going the way, I remember Adeze Duncan, she's an IML educator. And I'll never forget something she once told me. She said, you always want to remember there's a point in a trade. When you're entering a trade, there's a point where you can say where a trade could go. But then there's a point when you say, okay, it should not go here. Now, when you see it should not go a certain place, always know where you are in the market. Always know where you are in the market. That's why I do not necessarily like taking signals. But if you take a signal, know where you are. Do your own studies and know where you are. You should always know when a trade should not be going somewhere. And you should be able to cut your losses right then and there. So I just want to encourage you in that. For those who are losing, don't think you're a failure, but you want to lose small, because I'm telling y'all, this account was just $288 a month ago. And right now it's $600 and something. And I grow these accounts. This isn't my main account, but I do take accounts and I just like to grow them just to show that it can be done. And just to practice the skill of just growing smaller accounts. I enjoy doing that. I do want to take some questions before I hand it back over to Mahogani, but I just want to encourage you that you do not have to be fearful. Look at this Mexican peso or this USD ZAR. I did a sale and it's $1. You know, it's like you don't have to. Here's one. I I may have won for 50 bucks. I won pretty big on because I entered in at a key level. But it's not about winning all the time. It's about winning big and keeping your losses small. That's pretty much what I'm saying. Are there any questions in the chat before I kind of go on? I can't kind of see.
Hey,
I
Celeste,
thought I could see.
do you mind
Uh-huh.
just using basic market structure, show us how to mark up one chart?
Oh, sure. This is okay. Okay, and everybody marks up theirs, you know, like I know Gigi marks up hers a little different, but we all are doing the same thing. So what I do is when I mark up a chart, I look at I start at the highest time frame, which is the monthly. So we see market structure here. And what I'm noticing just offhand, does anybody notice this kind of pennant that it's forming? And I kind of did a long-term outlook about how I think this is going to end up. You see how we kind of have that same market structure at the bottom? I believe, I don't know when, it might be 5 years from now, I believe we're going to see an outbreak to the upside eventually, because just the way market structure works, when you have a bullish pennant like this, we can expect eventually after the price finishes doing what it does in the pennant, we can expect an outbreak to the upside eventually. I think it might be some time off, but I think that's coming. So I just started the higher time frame and worked my way down. So I drew my trend lines here. This is a very simple, pesos is a simple structure. Then I look at the weekly, same structure, pretty much. And this is just kind of a high level overview. If we look at the daily, it's still being contained within this. So you can literally trade this, you know, I mean, this is kind of over. Right here, we've had a lot of consolidation going on here. And this huge spike, remember when Trump announced that a possible Mexican tariff? This is when that happened in June. So that's that huge spike. But overall, we're in a downtrend for this pair. Ever since January, when they announced that rate, this strengthening of the increase in the rate, this pair has been on a downtrend. And so I use a lot of Fibonacci just to determine when to enter key levels. For instance, if I want to use a Fibonacci and just say from swing low to swing high, you know, we kind of see the key levels where the market's reversing. But without getting into too much detail, what we do is we still look at the market. And once we see what the market's doing on the higher time frame, then we go down to the lower time frames and we look at the patterns within the larger time frame. So from here, we can continue to draw our trend lines. You know, it's pretty much the same as we would do with any other pair. I just can't say that enough. It looks like another pair. You may just have a little bit more wicks, but it's not really, it's nothing to be fearful of. And the pairs, the exotic pairs, when they move, they move. They pay out very well. The volatility, and what you want to do is take advantage of the volatility of the markets. When the markets are moving, that's when you want to trade. You don't want to trade a whole lot of consolidation because it'll yank you all around. I always suggest when you see a lot of consolidation, go study. Go find a way that you can learn more about the country and the currency and what's going on. But that's a key also to trading, not just exotics, but any currency. Spend more time studying than you do in the markets, and only trade in trending markets. I wouldn't trade in a whole lot of consolidation where you're having to chase the market. You know, Gwen, is that about the idea of what you were thinking in terms of the
We do have some
market
questions
structure?
for you. We have some questions for you because people are getting a lot of knowledge from this. Deidre wanted to know what's the key time of the day that you trade.
Oh, ZAR, South African Rand moves the most between like in London session and early in the morning. So like 3 o'clock in the morning, 2 o'clock in the morning, all the way through 8 in the morning. You know, morning time is when that moves the most. So I would say that London session is really good for a lot of the exotics leading up into the New York session. And then catching the trending markets is really good. When you can find a good solid entry, ride it. Like, look here, where price hit this support. I mean, ride it on up. I mean, it's pretty much just protecting your profit, putting your stop losses. You can have a 20 pip stop loss and ride this on up for how many pips was that today? Over the next past couple of days. You know, you just have to manage your risk and don't over leverage. That's the key as well. Did that answer your question? Are there any other?
What made you pick doing exotics versus doing straight Forex?
Exotics, to me, I like the way they pay out. Sometimes I get kind of, when I trade other pairs, I just don't get the return. I like the return I get, quite honestly, with exotics, because you can actually trade a smaller lot size even and get a larger return, because when the pair is very volatile, when the pair moves, it moves. And I like too that I don't really experience a whole lot of fake outs. You know, sometimes you get a lot of news will mess you. Like ZAR doesn't really mess me up. With like, news doesn't mess up ZAR. You know, whenever like there's some type of GDP, or I pay more attention to what's going on in the country. To me, that leads those pairs. What's going on in South Africa? What's going on in Mexico? You know, if there's a rate decrease or increase, it does impact the pair. But overall, once it gets going, it's going. You're not going to see a whole lot of just fake outs with exotics. I haven't noticed it.
Okay.
Maybe try. Turkish lira. Sometimes you see some type of stuff going on with that. But that's just a lot of indecision in the markets. It's a lot going on in Turkey right now. But I don't trade it. When there's a lot of consolidation, I move away from those pairs and I go to the pairs that are more attractive.
Okay, and I said straight Forex. I actually meant major, because I know that these exotic pairs are still currency. I just misspoke. Somebody wanted to ask you, what is the payout per pip for exotic?
Oh, let's see. Now that's what y'all are really getting me, the payout per pip. When you know what, and I'm so simple, and I'm telling you, I'm honestly, when we talk about payout per pips, because you have to deal with you have to overcome the spread first. You know, it's almost like I honestly don't even calculate. I just get in at key levels and I mark off. You know, we have our ways that we, learn how to mark off exit points, and I ride. And so I don't really pay attention to so much payouts per pip. I just ride and I grab my profits. I mean, just to get that 47%, it was just, I couldn't tell you, quite honestly, what the payout was per pip, because I have to overcome the spread too.
Okay. And we have one more question in there for you, and thank you for your honesty. Do you share your pairs? This is coming from Godly Sorrow Brings. Do you share your pairs for others to get in?
Share them. I do. I have a trading view where I share a few things. Now, of course, we have our team where we share a lot more with our team here in IML. But I use social media as a way to introduce Forex to people. So I do have a trading view, and I share a lot, especially ZAR. ZAR is my favorite. I just love ZAR. That's my favorite pair. So I do share. I don't give signals at all. I'm not a signals person. I'll always preface my trades that it's for educational purposes only. You're entering it at your own risk and do your own study. Because me, myself, I'm a student. And as you saw, I have losses too. But I do win more than I lose. So I'm profitable not because I don't lose, but because I win more than I lose.
Yes. And that's what I think that's everybody what they need to understand. They get mad when they lose something, as if it's going to ruin everything. What is your, since you said that you do share on TradingView, what's your TradingView name?
It's Mrs. Celeste. Let me go. Just so y'all can.
And I want to bring up a good point. She was showing her win and loss percentages. There are 6- and 7-figure traders who win. Their average is about 60%. It's all in risk management, getting out of a bad trade. Like she said, you can be a 6- or 7-figure earner by winning 50 to 60% of your trades. It's win big, lose small.
Here I am here. So if you find me, I'm just Mrs. Celeste on TradingView. And you can see I share a lot, this Dow so I do a lot, but you'll notice I have a lot of ZAR because I just love ZAR. And, but I do share other pairs as well. But just to encourage, don't quit. Don't quit because you're losing. What I'm willing to bet is some of you all are holding on to losing trades too long, or you're getting out of winning trades too early. That's so key. You got to learn when to get in and when to get out in both instances, because you can be leaving money on the table. If you're winning, don't just say, oh, I got $1, let me get out. Know where you are. Know the key levels. Know when to get in. Know when to get out. And we teach you. I'm just going to throw out my team leaders, Stevenson Lindor and Gigi, and then we have Marius, we have Terrell. We have some phenomenal leaders, I'm telling you. And we have sessions daily. We have something going on every day. And I'm telling you, outside of what the educational platform offers, we're always getting knowledge and we're learning the skill set. So I'm learning, when to enter and when to exit, and not to be greedy. I'm learning that you can have profits and stop losses. It's better than losing your money, right, Gwen? So you just have to put it all in perspective.
I completely agree with you, Celeste. One of my biggest lessons was, this was a little while back, was I was holding trades, but I was holding losing trades, hoping that the market would turn around. And after a while, a light bulb went out of my head. And it was just like, I'm holding trades, but how many of them are winning? And that wasn't happening. And I think that's learning to let go. That's learning that it's okay to close a trade out, that if that trade goes different way, remark up, get back in again at the right time. Thank you so much for sharing that, Celeste. Is there anything else you wanted to share? Because you're reminding me to go into a mindset before I start showing some market structure. Actually, what I'm going to show first, actually what is taught, and then I'm going to show what I do, because I want people to know that people mark up as you do very differently, but we're following the same structure, but then we begin to develop our own. So I'm going to show 2 markups. But is there anything else you want to add, Celeste?
There's nothing else I wanted to add unless someone, I just encourage you to start, if you're going to trade exotic, start in demo and study it like you would study a major or minor. It's a market structure. I remember Gwen saying one day, you can trade anything, right, Gwen? You could trade a stock chart, you could trade an Apple chart. If you could trade one chart, you can trade them all. You can mark them up and do them all the same. It's not any different. You just have to know where you're entering and know when to get out and use proper risk management. So I encourage you to study it and just try it in demo. If nothing else, you'll be pleasantly surprised. You are not going to blow your account if you use proper risk management and you know when you're entering.
Yes, I see that. And I was just about to answer that question for Earl. And you're correct about risk management. I preach that because I'm having to preach it to myself often. Earl was asking about how do you determine giving a trade room to breathe, staying in or getting out, or is it just a stop loss?
The key levels in the market. I use a lot of Fibonacci, where you can kind of see, for instance, or just without. sometimes I use Fibonacci to tell me my entry and exit levels. Sometimes you can use key areas in the market, like you can see these wicks, you know, so it's just a matter of just, and I don't know how much technical analysis we all have, but if you enter in a key point, you just kind of, as you study, you learn the key levels in the market and price action. You know, I'm a big fan of just price action trading. Learning to read candlesticks is another thing. That's a part of it too. Recognizing when you see price exhaustion, you know, like if you all saw gold, you know, earlier, you saw prices starting to exhaust. You kind of know when you kind of need to close out versus depending on the key level it's at, and also depending on the wick, you know, the wick exhaustion. You just have to kind of learn how to read, and that comes just with studying the market. I didn't know it at first, and quite honestly, since I came back to join Stevenson's team, I'm telling you, I have learned exponentially. I thought I knew something when I left. I'm telling you, just in a month, the knowledge I've gained has been phenomenal. Just on learning that, because it's not easy to know when to enter and when to exit. But if you study it, you will learn it.
Thank you.
And I also agree that it's about your stop loss too. With the levels that she's talking about, she's going to place her stop loss there. You never really want to get into a trade and then create your stop loss. You know, that's your room to breathe. And then get scared and keep moving your stop loss. And keep moving your stop loss. You're not creating room to breathe. What you're doing now is you did a trade where you got in at the wrong time and you need to make a better entry. I hope that Celeste, she had a really good answer to that question. I hope that helped you. So I want to go into mindset. Can who's ever unmuted talking, can you go ahead and mute yourself, please, for us? Thank you. Okay, so because Celeste was talking about exactly what mindset is about, and the mindset is really, really, really accepting with all the love in the world that you are going to fail. You are going to fall. Now, I know that when I said that, some people was like, what? It didn't feel too positive. Because most of us have been taught that failure, losing is bad. So when you saw 53%, oh my gosh, she lost 53%. And not really understanding that we weren't born that way. When a baby starts to learn to walk, how many times did that baby fall down? And before that baby gets back up, do you see them having a pep talk themselves? Like them calling their mindset guru on their phone and praying to God would hear them and please let me be able to get back up. I don't think I can do this. All these people around me walking around but me. I will just sit on the floor for the rest of my life. No, that's not what you see. That baby pushes themselves up on their hands and knees, using every resource around them to pull themselves up. And they start all over again from the beginning. And then they fall back down again, then they get back up, and then they fall again. This time, maybe they'll take a few steps, 10 steps, fall down again, get back up, and the process continues. When were we trained out of that process? You have to really think about this. When were you trained out of that process of something happening and you just picking yourself back up, going to the next trade, stepping back, coming back with a clear mind, but going to the next trade? You don't know how many people stop trading after a month because they're not a millionaire. It is not in our nature, starting from concept, for anything to fail and just without going and doing progress. So what I'm going to do is I'm going to do a chart with you guys, and I'm going to show you what I mean about marking up a chart. If you get kicked out, get back in at the right time. So I'm going to share my screen. Let me see here. Share.
Y'all get ready to see some good, clean charts.
And let me start from here. Now, first, I do want to tell people just some beginning rules.
Open the middle mirror.
This is the beginning, very beginning rules. The basic recipe of market structure. You got to understand that your job is to be a trader. You are an investor, and your job is to trade. So you got three things. Number one, boxing price. Number two, responsive price. Number three, know what I am willing to lose, aka know your risk management. Now, number one, when we first start off, number one, boxing and price. Knowing the market moves in three ways. Impulse, either up or down, buy or sell. Correction, this is actually confirming the direction of the impulse. And then a continuation. That's just when the trend continues in the first impulse. That's it. That's all we're trading. There's no specialness to it. Doing market structure is right there in front of your face. Impulse, correction, continuation. Number one, your ingredients for this is identifying the overall trend. We're starting from the highest time frames. Three most important time frames: monthly, weekly, daily. Monthly, weekly, daily. Those are your three most important time frames. It tells you what the market is going to be doing. That's all. You need to know what the market is going to be doing. These are your high probability trades. I know people who just do monthly, weekly, daily, and the rest of the time they're just looking at the lower time frames till when should I get in. Number two is identify when the market will be making its move. That's H4, H1. This just tells me what the market is starting to do. This is my setup. And then we got number three, enter the trade. That's 15 and below. 15 minutes and below tells me when to get in. It's my entry. And this is the portion that a lot of people, they kind of stop at H4, H1, and then they don't understand how to use the lower time frames, and they're using it, but they're jumping in too quickly because they're not using structure or knowing their patterns. And when you correct it, you're going to be okay. So utensils of the trade, trend lines, rectangles, you can use whatever you want to. This is up to you. Horizontal rays, lines, Fibonacci. This is easy. 1, 2, 3. Every freaking step is 1, 2, 3. 1, 2, 3, 1, 2, 3, 1, 2, 3. And it's repeating that over and consistently. So let's go to a chart. What I am going to do is I'm going to do Euro odd. I am going to clear my screen off, and I'm going to take you through exactly what I was talking about. So let me clear off all my drawings, because I like to do it with all my indicators, so I like to do it completely clean. What's my three most important time frames? Monthly, weekly, daily. I start from the monthly. I'm marking my low and I'm marking my high. Now I'm going to my weekly. I'm marking my low and I'm marking my high. And now with this, I'm looking at my trend. This is going up on my weekly. I mark it. Go to my daily.
Leave your food on the floor for that night.
Jay, can you do me a favor? Can you mute yourself? Thank you. And then I go to my daily. And on my daily, I'm doing the same thing. I'm looking at currently what's happening. Is there a trend change? Do I have a new high? Do I have anything else to put in there? And I'm looking at my high right here was the same as my weekly, which is right here. And then my most weekly low is right here. My most current low, my daily low is here. And this, I love this because if it breaks this line, if it breaks this and doesn't move up, then it comes down here and breaks this and doesn't move up, I just look left. What's my legs low? Now I just did, right now, I know people who this is what they do. And then now they are done marking their charts up and only thing they're looking for is what's going to happen. What should they be doing? Let me add this little lower thing right there. Because right now it got to the high, look at all the way back here, August, September 2018. This has been pushing it down. We had this Apple announcement that made the market go up. Is that it? Is this the Apple thing? Yeah. And also right here, it wicked up a bit, but now it's being pushed back down. So I'm actually expecting this right here to actually be something that continues to go down. And that's me also looking at patterns. I go to my 4-hour. What did we talk about? What did we talk about the way the market moves? Impulse, correction, continuation. Impulse, correction, continuation. What's next? Somebody tell me what's next. Y'all awake out there?
Entry.
Continuation.
Correct. In a continuation. If it does, I'm sorry, a correction. If it doesn't break this line, and as you see, we have this red going down here, this momentum, and we have a green candle peeking their head in, and here's another green candle. So if it doesn't break this line, we're looking for a correction. Everything, impulse, correction, continuation, impulse, correction, continuation. What did I talk about here? I'm not showing you anything else. I'm not talking here. I've used everything here. I've just went to my 4 hours. I'm going to go to my 1 hour. I'm just getting more and more into the market because I'm out now. I'm looking at, what did I say here? Tells me what the market is starting to do. We showed what the market is doing. And now I'm starting to look for my setup. I call this closing the curtains, making it smaller. I pull it over and I'm looking at this and I'm seeing something here. I'm seeing something that I love to see, a pattern right here. I see this pattern and I'm like, okay, well, I see a reversal pattern. Going to my trend line. Another confirmation for that correction. These are all confirmations, y'all. Confirmations. And yes, I can determine my entry. I can say, you know what? More than likely, my setup is right now going to be for a buy. But I'm not. This is just me looking at this particular place and saying that I'm looking for a possible buy. I'm not getting into the market yet. Because why? Now I need to know when to get in, which is 15 and below. I'm going to go to my 15-minute because I've already gotten my pattern right here. I got my one confirmations, the impulse correction continuation. Now we're right now waiting for correction. I got a descending channel. That's going to be one of my reversal patterns. So that's another confirmation. And actually going against the trend lines, another confirmation. I'm going to my 15-minute. And on my 15-minute, I'm looking and seeing what more patterns I see. Does anybody see any patterns here?
Double bottom.
Go ahead.
It looks like an inverted head and shoulders.
Okay, I can give that to you. Yeah.
Descending channel.
Okay, yes, that's what we marked up here. Yes, you're correct. There's something that is so plain as day. That's another confirmation.
I want to say that it would be cheating.
Huh?
I want
impulse for your buy.
There you go. So what's giving you that impulse for the buy?
And also it's starting to form some higher lows as well. When you can see price starting to reverse, there's higher lows and higher highs starting to form.
There you go. All of these pattern confirmation, guys. This is how we're able to get into the market. This is not any kind of anything that is like extra magic. It's just us sitting here practicing. This is what we do on our team. This is what we get together for. This is why we are investing in ourselves so that we can learn how to use this and just get in the market and make money. We have impulse, correction, continuation, correction, continuation. I just look left. Structure. Where would I possibly maybe take some profit at? Probably here. That's for my scalpers. But look at, if I go to my higher time frame, I possibly have 177 or 170 pip move right here. That's money. That's pips. Pips, that's a percentage of your accounts. Risk management, looking here and putting a stop loss, a manageable stop loss. That's why we look at the lower time frames for the correct entry and look for a pattern, because if there's no pattern, it can keep on going down and push back this just to fake us out, and more than likely just come all the way down here and go for a 200 pip fall. All is possible, but we look for our patterns to confirm our entries. And what if this thing keeps on going up to do another test at the top? That's a 400 pip ride. But of course, we're looking for patterns. Once it gets to this area, for that to be true, we're looking for patterns. Now, I hope this was easy. It really is. When you continue to show up and practice, we give you, you can practice on your own, but we give you plenty times to practice with us as a group. IML teaches you. As a community, we are coming together so that we can help each other and answer questions. That's why we joined this team. We can do this by ourselves, but why, when you have the knowledge of the people on this team to be able to help you, assist you, so that now you can do this without having to feel like you're by yourself. This actually is a very good trade. I was looking at this. You actually saw I had it marked up, but this is what I'm waiting for next week. I want some more of this. The confirmation actually happened here when it bounced off of this trend line. Impulse, correction, continuation. Any questions?
Yes, Mahogany, I have one question. When you go to reach your take profit, is it more, I guess, conducive to take profit at the body of the candle or at the high of the wick of the candle?
I'm looking to take profit according to structure, so I'm looking left.
Okay.
So I don't know even what the wick or the formula will be. I'm just looking left, and I'm actually closing out some of the profits and continue all the way up here. And if I get a change in my trend, then I'll do something else. But I'm looking at my structure.
Okay, I got you.
And I know you said the wick. I mean, if the wick, if this right here, let me move this up. If this right here, I'm going up. I mean, these are the wicks, but if I put at the body, am I cutting anything out?
Right. I see what you're saying.
So it just depends on, and then at the same time, you can do it here. And this is why I like to use this rectangle tool, because the rectangle tool is always going to help you with that information. Now you have a little area. You have your wicks and your bodies.
At that level.
And again, this right here, I'm just looking left, and this is more so the scalping move, because I believe that this right here is going to go up and then come right back down, because this right here is not overly impulsive. So I believe it's going to come back down for a retest, and it may come here and then push back down and then get impulsive, very big impulsive for it to make its push up. Okay. And then also we got to actually look and see what's going on with the euro, what's going on with the odd and news. You're welcome. Any more questions?
Yes, Mahogany, I have a question for you. I know you just went over the perfect entry or the optimal entry, and you do it on the lower time frame. I think I got it, but I wanted to see if you can revisit that again, because I'm always having trouble on the proper entry.
Okay, so I'm always looking for confirmations via patterns, via structures. So what I'm gonna do is I'm gonna take these right here off. I'm gonna take this right here off because this right here was I used this pattern to do some more confirmations about what's coming up. And say I'm here on the 1 hour. So I'm here on my 1 hour. I have this trend line here going. It's touching. This could be a little bit better so that I won't cut off too many stuff or too many tips. I'm going on my 15-minute. I'm looking at with the actual not just the trend, but what the actual patterns have been. This was an impulse. This was a correction. This is a continuation. And then I'm looking for another correction. When I'm looking right here, I'm looking at patterns now before I'm getting close to my entries. I'm looking at the pattern of a reversal channel. Like I said, I have my impulse, my correction, my impulse. This right here, this channel. So now this is telling me that this is something that I'm looking to get into very soon. I'm also having a impulse, correction, impulse, and the correction. So right now, if I draw this line a little bit better, if I take this line and actually make this line a little bit better, and if I don't want to cut everything off, I want to do it like this. I want to see this right here break first. Because if I didn't get in right here at my bottom risky move, if I didn't get in here, it pulled back. And I didn't get in here, it pulled back. I want to see this right here correct. This could very well correct and fall back down to this line and bounce up and down. So I'm just looking for that entry is about the pattern I see. If I do not see a pattern, I am not getting in. A lot of times we just see a candle going up and we're like, time to get in or buy. We see it going down and we're like, time to get in for a sale. No, you're looking for patterns. You have to be patient because news can make this change for a little while. There's something that can make this change. So your entries are going to be about the patterns you see. I want to see this line break. And then I want to see a retest. And then I want to get in. If I hadn't already gotten down in over here. And this right here happened on Friday morning. Now I wasn't looking at this and I didn't see any of this right here. I was not even looking at this pair. And sometimes I'll miss entries because I'm not looking at the pair. So again, your entries is about patterns that you see. And then if you need more, you can go to the 5 minute. You can go down to any time frame you want to be able to see a pattern really well. Impulse, correction, impulse, correction, impulse, correction. We are expecting an impulse, but I want to see it break this. It got here and it fell back down. This could very well just correct all the way down here and then come back up. I want to see, and if it hits here, I want to see another impulse. Your entry is only and always going to be about the pattern that it's making at your trend lines, at certain key points in the area. That is what you're going to practice most of all. Marking up market structure can be very easy. It's noticing patterns, noticing reversal channels. This is all going to determine your entry. I hope I answered your question.
You did, and that makes perfect sense. So just to clarify, when you're getting in, you want to look for the pattern. When you locate the pattern, the entry is going to be on the correction or the retest.
The entry is going to be after the correction. Some people like to get on the breakout.
Okay.
So when you see this impulse happening, I used to get like, oh my God, I want to get in. I want to get in, and I get in. And then I'll get in right here. Let me show you where I would get in. I would get in right here.
Mm-hmm.
And then it'll hit it and go down.
Mm-hmm.
And I'm like, oh my God, it's going down. So I'm going to get in right here.
Mm-hmm.
And then it goes up. So you don't really want to get in while the impulse has already taken place. You don't want to really get in on a correction. If you get in on a correction, there's different things that you start to learn how to utilize. This right here is making an impulse correction pattern. So with this correction pattern, if in, it would be a risky entry, but it would be at the bottom, so I can ride it to the top.
Got you.
And then if I don't see it being impulsive, it's corrective, I'm taking profit at this line because it's going to push back down. And then I'm going to enter here again. I'm at the bottom again, and I'm waiting for that. I'm waiting for it to break out. If it's corrective again, I'm getting out right here. But I mean, this is the 5 minute. This is not a really big correction. So to me, it wouldn't even be worth it for me to do this unless somebody was scalping. On the 1 hour or 4 hour time frame, see like this right here. If I got in here, that's a 43 pip ride. So maybe for somebody on this higher time frame, this correction, it would be worth it for when it came up to ride it back down and then get out here, because this right here was not at all, I'm trying to make this bigger, not at all impulsive. So again, you definitely want to make sure that you're getting in after the correction. You're getting in on the breakout of like a trend line area. Definitely don't try to ride an impulse after it's been impulsing for a while. How many pips are you going to go for versus how much drawdown we should withstand? It depends on what time frame you're trading from. I trade from the 4 hour, so I'm going for more pips. So if I'm going for 150 pips, because I'm trading off the 4 hour, if it goes 20 pips in profit, I'm not at that point wanting to take profit, because I'm not looking for a scalp. But if I just want to scalp and I'm doing a higher lot size, which you do as you grow, if I'm going to do a higher lot size and I only need 20 pips, I'm going to take those 20 pips. How much drawdown? Drawdown depends on where you're looking left to do your stop loss. So your drawdown, you have that room that you have for that stop loss. It's going to be a drawdown. If it goes past that, let the market kick you back out. The thing is making good entries. The thing is making correct entries. You shouldn't have to be in a drawdown for 50 pips. That means you didn't get in correctly. And then your account size. If you know that you're doing long-term trading, yeah, you might be drawdown 50 pips, but you're expecting a 500 pip drop. So it all depends on the time frame you're trading from and the lot size you plan on using and how many pips you plan on getting. And again, your drawdown, it needs to be according to looking left in structure. Over here, according to this is your most recent low. This area right here is your most recent low. So that means that you're looking for a stop loss beneath, not here at it. I'm telling you, I used to do that, and when I would put it here at it, market just comes down and touches it and kicks me out and goes back up. That's why the keyword when people talk about looking at your previous low for your buys, with your previous lows, you want to put it below the previous low. I like to go 5 pips. If it's a big, like if it's a fast moving pair like GJ and it does a lot of fast movements, I may even do 10 pips. 10 pips past my previous low. But this right here would be it. And if I made the good entry, oh, that's on the 4 hour. Never mind, let me go down to a lower time frame. So right here, this right here is the most lowest low, but I'm going to actually look at my trend line here, because that right there I'm not going to sit there and do all of that. That is not something I'm going to do. I'm going to look at here, I'm here, and I'm going to place it 5 to 10 pips below this line right here. And of course, that's me looking at the actual what do you call that, pattern that's saying I should be getting in. And then if it goes low, I'm taking that loss. I can get in for a lower place. And it continues to make this descending channel, this reversal channel. I know it's coming. That's why we always talk about doing impulse correction, getting on the continuation. If you have that impulse correction, when that continuation goes, that's when you can get in, and your stop loss will be even smaller. It'd be right there below that correction. Excuse me. Any more questions? Thank you, Grant, for putting that in there about the 2%, that example. And what we're learning, I'm sorry, I sometimes I forget that there is what we talk about should be an actual place, and then there's the thing of when you get into tight entries, sometimes you only need a 10, 15 pip stop loss. There was a time where I didn't do anything less than 30. I just didn't do it because I didn't know about the tighter entries, and that was where I was at then. Now I'm learning about tighter entries, and now I can do something a little bit different, which allows for me to use a bigger lot size. Any more questions?